Okay, welcome ladies. My name's Olivia Summerhill and I am a fancy term certified divorce financial analyst and a certified financial planner. All that means is I know what I'm talking about when it comes to finances and divorce. And in my practice, I only work with women. So I'm here today. It's going to be a joy because I hope that you can take something from it. And I'm going to start with one statistic. 77% of Americans feel anxious when it comes to their personal financial situation. So let me repeat that. 77% of people feel anxious when it comes to money. And if that's you, that's completely okay, because that's completely normal. And when it comes to money and divorce, that's a whole nother level. And I'm sure that you're feeling a lot of anxious and anxiety feelings right now when it comes to money. And you're on top of that putting divorce. Just know you're not alone. And so for today's purposes, we're really going to keep this presentation simple as to not pique your anxiety, okay? We don't want to make your anxiety worse. So we're going to keep a low bar as well. And the thing I want you to take today is at least one piece of information that's useful, whether that be for your divorce situation or just in general financially related to your personal situation, okay? So we're going to get started. And I'm going to move the screen to the next one, which is my favorite screen. Okay, magic certainty button. It's not there. So it's not there in your relationships. It's not there in your life in general. It's not there in your future. It's not there with your money. So why I bring this up is there's no certainty in divorce either. So just know that going in, whether you're in the middle of the divorce, thinking of divorce, or maybe you're already post-divorce today. So that's just something to consider and think about how nothing's certain in life. Okay, so what are your options here today? We're going to outline. We're going to talk about the house. Okay, what happens in divorce? We're also going to understand your retirement plans and accounts for you and maybe your spouse and Social Security, as well as tax implications we're going to go over today. We're also going to go over hidden assets. Okay, because that's a fun one. I think a lot of people ask me about. We're also going to talk about insurance. And the last part of it is going to be financial myths. Okay, because that's a big one. And then also some tips that I can leave you with. Disclaimer, I am not here as a tax accountant. I am not here as a lawyer or an attorney. I am not here even giving you financial advice. I am here just to give you some education. Okay. Okay. Next slide is about the marital home. I have yet to have a female come to me and say, I want to be uprooted from my beautiful dream home and I want to take my kids out of the house during divorce and just move away. I've never heard that. So have an open mind here and just know that you may be able to stay in your house because that's usually what I hear women want. However, you need to make sure you can afford it. Okay. So you need to do your due diligence. You can't be ignorant and just assume I'm going to keep the house. I'm absolutely going to be able to afford it. And it's just going to, my finances are going to be okay. You have to do your research and know if you're going to be okay. And that starts with that budget. So if you are keeping the house, let's just assume you keep the house. Can you even qualify for a refinance, which means you're trying to get his name off of the house mortgage when you get divorced? You need to know those answers. And the way to do that, so I'm not going to leave you hanging, is talk to your bank. So during the divorce, or maybe even pre-divorce, as soon as you can, you always want to be prepared in divorce. Talk to your bank and ask for options. So if you're the stay-at-home mom, or you haven't worked for a few years, can you even qualify to get a mortgage, or can you qualify during that refinance process and keep the house yourself? Or if you and your significant other right now, let's say you're going through a divorce, want to sell the home together, can you actually afford to downsize and get a different house? Can you do that on your own? You need to find these answers, and that means talking to your bank and talking to a mortgage professional. So that's a mortgage officer, a mortgage banker. Another tip is you really want to talk about, if you're going to sell the house, getting it appraised appropriately. So I have women come to me and say, and this is normal, so if you've done this, it's okay. Oh, I just took my Zillow number and Redfin number and I divided by 2, and that's what the house is worth, and that's what we're going to split the assets in the divorce for the house. The house is one of your biggest assets, if not the biggest. You don't want to mess with that number and be wrong. You need to get a qualified appraiser in there, and it does cost money. In some parts of the states, that you're in, it might be a few $100s. Search around, get a local appraiser that knows your area though. A way to do it for free, if you really don't want to spend the money on an appraiser during the divorce process, is getting a realtor and just calling a few realtors in your area and saying, hey, we're thinking of selling the house and can you come and see what it's worth? They'll do an estimate for free and get a few of those numbers and then divide those and see what that number comes out to be. It's going to be a lot more realistic than the Zillow or Redfin that don't know your area and where you're at. Another point to that is there is a thing on a certification and a designation for realtors that their professionals have as divorce. So online, when you're searching for a realtor, look for divorce realtor. That's going to be someone who can actually help and know about divorces and help you guys within the divorce process and help you have a smoother transition if you decide to sell. So you don't have to even sell. It's just you're knowing the numbers and you're knowing your options. That's what I'm all about, is you need to know the numbers and finance, especially when it comes to divorce, so that you can make the best decision for you during this process. Okay, so, and leaving on this slide, two more things is usually a great option is to sell the home during the divorce with your significant other before you finalize, just because then you're splitting the costs and the proceeds and it simplifies. Remember at the very beginning, I said, I want to keep it simple. We're going to keep a low level, just learn one thing today. And if that's what you take from it, that's just something that a lot of women do. And that helps. But if you want to keep the home, just know your budget and make sure you can afford it and talk to your bank. Last point here is the really big, scary words is capital gains tax, but it's a good thing. So it's scary, but good. This is where the IRS always wants to take your money, okay? If you make a gain on something, they want to tax it. They want their money. They want to take it from you if they can. So this is one of those things where they actually have an exclusion where they're not going to take it up to $250,000. So if you sell your house as someone who's married filing singly or married filing jointly, you get double. You actually get $250,000 to exclude if you gain selling your house. And this plays into divorce very nicely, because if you guys married filing jointly during the divorce and you sell the house for $500,000 over what you purchase it for, let's say $500,000, and you sell it for $1 million, that $500,000 gain, you're not taxed on because you have that exclusion of $250,000 each. So it's really helpful. And I know I have this example here saying $200,000 you bought it at, so that's your basis. And then you sell it at $300,000, that $100,000 gain, there's no tax on that because that is part of the capital gains exclusion. IRS sometimes does these things, take advantage of it if you can, especially in divorce. So that's one thing I want to point out today. Okay, this is a big one. Again, the house and the retirement plans are usually the biggest assets you have in divorce when you're splitting up everything. These are so many complicated terms. DB is defined benefit. DC, defined contribution. 401k is just an IRS code section that you don't need to know about, but just know the name. And then you have IRAs, which are individual retirement accounts, and you have 403bs. All of these different accounts are just accounts to house retirement assets. If you take that from today, all you need to know is it sounds really complicated. They're all different accounts. And you really want to make sure that you know that a lot of these accounts, because they're for retirement, and the IRS is saying, I don't want to pay you to retire. I want you to pay yourself. So save for retirement yourself. We'll give you a tax benefit by giving you an account and having you not get taxed on it until you retire. So they're trying to provide a little benefit so you save yourself. None of these accounts, besides that Roth, has been taxed yet. So make sure if you're in the middle of a divorce process and someone says, hey, you're going to get the retirement account and I'm going to get just the cash, make sure you know you haven't paid taxes on that retirement. So you need to be compensated, because if they get cash, there's no tax on that. So that's not really fair if you get the same amount and you still have to pay taxes on your retirement portion because it's pre-tax. So just watch out for that. And with that being said, that Roth IRA, that's after tax. So that has been taxed already. So in divorce, that's kind of one of those accounts in retirement that you want to take if you can. If there's a pre and after, take the after because it's already been taxed if you can, okay? Also, next point here is understand what happens in divorce with the retirement benefits and the spousal benefits. If your husband, let's just say he's the one who's working right now, if he dies and you have that company that now might revert back all of his benefits for retirement to them, unless you know. So what I mean by that is every single financial situation and every single retirement plan is different. So you need to know if his company, if he gets fired even, if he retires, if he dies, will you get the benefits that your divorce said you would get from him? So if he had a $10,000 in an account for retirement, is that going to be your money if he died? So how you know and how you can find out is one thing. You can always talk to your lawyer and figure it out that way. If you want to actually do the investigative work yourself to try to save money or just understand, you can actually call his company and ask for the retirement benefits department. If they don't have one, just say, hey, I'm just wondering if I get a divorce, what happens to the benefits? They should be able to answer the very general questions. If you say, hey, my husband's name's Billy and he has this much, will I get that? They're not going to be able to give you that answer. They're going to want him on the phone. But just try to ask these questions to his firm. If he's the one with the massive assets in retirement, you need to know. Also, you can go online. Some plans, bigger plans will have their summary benefits plan description, such fancy terms, I know. They'll have that online where you can actually go to the section of that booklet and say, okay, well, if we get divorced, this is what happens in their plan. Because you need to know what happens with that retirement plan if you're getting a divorce. Okay, the next part is your responsibility. So I hate to break the news to you, but it's not your lawyer's responsibility to tell you after divorce when to take the money, where to take the money, and at what age. So with retirement plans, the one thing I want to say today is make sure you know at what age you can pull from these. This is where it gets a little more complicated. So we're going to simplify and just say, look online, talk to a financial planner, talk to your team. Really make sure at the very least, talk to Savvy Ladies hotline because these financial planners are going to know the answer. When should you take from what account so you don't get penalized from the IRS? Because remember, the IRS wants you to save for retirement. So in a lot of cases, they're going to penalize you if you try to take it in your 40s and 50s. Unless, and that's where we go to the last part, you have what's that fancy term called quadro. So qualified relations domestic order is a whole plan that you actually can have to split the retirement assets. Your lawyer will either be an expert in this and help you with this process of splitting that retirement plan, or will get the right professional who is a quadro expert to split that retirement plan for you. What mistakes I see as a financial person in divorce? Waiting. Don't wait. So the biggest mistake is waiting and saying, oh, okay, so during divorce, I know that we're going to split this retirement plan. I'm not going to know anything right now. It's okay. And post-divorce, it's going to just show up in my account. It takes a minimum of 3 to 6 months during and post-divorce to get a quadro done. Because that's his, let's just say it's his retirement plan. That's his retirement plan processing paperwork. That's the quadro experts. That's your lawyer, your husband's lawyer, all trying to sign stuff and get this process done to split the retirement and do it correctly on the first try is just really difficult because it's very, very complicated. So all I need you to know today is don't make the mistake of waiting till after divorce thinking, oh, it's going to be done really quickly, because it's not. You want to process it as soon as possible, which means doing it during your divorce. Last part here is you can avoid a 10% penalty with a retirement plan if you're not at the right age to pull. So remember I said, certain plans, watch out because the IRS might penalize you 10% from pulling at the wrong time. A quadro bypasses that if done correctly. And when you pull, so if you pull that money, you will not have that 10% penalty, but you will pay ordinary tax on whatever you pull. I know I just went a little deep there. All you need to know on this page is there's pre-tax, there's after tax, there's age differences, there's penalties, there's IRS, there's a lot of things in retirement plans. You just need to know the basics and at least have a team around you explaining what's going on, okay? And do it sooner than later. Don't wait. Okay, Social Security. We're not going to go into too many details here today, but the biggest little things I want to talk about today is if you have been married for 10 years or more, this is time to rejoice because you get a portion of his benefits when you retire. So let me repeat that. When you are divorced, you've already been married for at least 10 years. And let's just say you're in your 40s. In your 60s, when you take Social Security, you're going to get a portion of his benefits, even though you're now divorced. This is huge. So that means that if he was the one who worked, or even if you worked and he worked, if he made more than you and you guys were married for more than 10 years, you're going to pull from his benefits because it's going to be a higher benefit in Social Security. That's great. A strategy a lot of people will do with their lawyers, as long as they know about it, is if you've been married almost 10 years, you might want to stay married till 10 years so that you throw in that benefit of Social Security. And talk to your lawyer about how to do that if you don't want to, wait and stay married until 10 years. There's some other things that you can do. And other than that, I want to point out there that he can't threaten you and say, oh, I'm not going to give you my Social Security benefits, or, oh, you can't pull until I pull, and I'm not going to pull till 70 just so you can't pull till you're 70. Or, oh, I'm not going to let you have that. Anything that he does, like let's just say he gets remarried right after you guys get divorced and he tries to threaten saying, oh, you're not going to get my Social Security benefits now. Nuh-uh, you still get his benefits. So again, let's rejoice. Let's take a moment because that's phenomenal news that if you've been married 10 years, doesn't matter what he does in life, you still pull from his benefits. So I hope that that's something that's new to some of you because that's huge. Okay. Let's take a deep breath right now because again, money equals anxiety equals that 77% that I said at the beginning, the statistic. I don't even believe that. I think it's probably 98% of all of us feel anxiety around money. And then we put on top of that divorce. So all of us feel anxious around money. Let's take a sip of water. Let's just breathe for a second. We're almost done with this webinar. We're taking only one thing from today. We really aren't going to overdo it. So if you already taken one thing, you can, leave the webinar if you want, but I hope that you're taking a little bit of time for yourself right now and knowing that this is a really hard process to go through. And that's why we're just having a conversation, just a little education, and take it as you want and just at least get one thing from today. Okay. And what I'm doing here on this outline is showing you, okay, we've already talked about a few things. We have a few things left. So let's get going with the really fun part, which is taxes. I have left off as much as I possibly could because it gets really nuanced and we don't need to go there. For today's purposes, you do need to know transaction costs. So for example, you decide I'm going to keep the house. Okay, so you keep the house, but in a year and a half or 2 years, you decide you're going to sell. Watch out for the transaction costs for that. So the realty fees and the closing costs fees, you are now solely responsible for those. You can't go back in time. So make sure you put that and implement that in to your divorce plan because money is absolutely yours. If you need to get paid for, all those costs that you might have, talk to your lawyer and make sure that you factor that in. Okay. Another thing on here is tax implications when it comes to stock. Okay, here's my favorite example is in the 90s, you and your husband bought Microsoft stock for a few dollars, okay? And now it's worth 10,000. Great, so now it's 2021, 10,000, so it appreciated a lot over the years. That's not even realistic. It's probably now worth a few million, but we're just going to pretend 10,000. And you also have a savings account worth 10,000. So your husband comes to you and says, well, okay, we're in the middle of divorce. I'm going to take the savings for 10. You take the Microsoft stock for 10. And that's the same thing. And you think that's fair. I would think that's fair if I'm not in this world of divorce and finances, because 10 plus 10, equals 10. That's not fair at all. Because remember, taxes, IRS, they see that you just made a ton of money. You only put in a few dollars and now you're going to get 10. They want a portion of that. Okay. So you're going to be paying taxes on that portion. And he's not, because his savings account that you guys had together is no tax. It is going right into his bank account and he's happy and joyful. You're going to be paying taxes, which means people always ask me like, okay, so what am I going to get? Well, it could be 8,000, 9,000. That's where CPA. So you have your tax accountant come into play and looking at returns. That's what I do as well. But it's just really all you need to know for today is you don't want to be taxed on stuff and not know about it, because then you're not getting the full portion that maybe your significant other is in the divorce. Okay. Basis is just what you paid to get a product. So that's your house. Your basis is what you paid. Let's say you paid 200,000 for the house. That's your basis. In this slide right here for tax purposes with a stock, your basis was a few dollars on that Microsoft stock. So just know basis is a lot of things that a lot of lawyers miss because they're not the financial gurus. Remember, that's not their job. They're helping you through a different process. You need to be aware of these things. So if you are in the middle of a divorce and you forgot what basis is, just look online, basis and divorce, and it'll help you. Or again, call Savvy Ladies Hotline. They'll be able to help you for free. Next slide. This is one of my favorites, and I could go on and on and on and on about so many different hidden assets. These today are going to be just some of the missed ones, okay? Cash is cash, and today, miles, points, reward systems are also just as valuable as cash. So let's take a moment and think about your situation. Do you have a department store credit card? Okay. Does your husband right now have an airlines miles rewards point card and you don't know anything about it or where it is, but you know he has one? Okay. These are the same thing as cash. You need to take that into consideration. Do not forget about these. Where is your things stored online? You need to remember all of these stuff is also part of your divorce. Do not forget to talk about this, okay? That's just all I really want to talk about today on this slide, because a lot of people forget they have Venmo and they have PayPal and all these other things that aren't discussed in divorce yet. So it is necessary to talk about. Don't lose out on this money. It's yours. Okay, we're going to go through a few tips now. And there's a few slides of these. We're almost done. Stick with me. Okay, know your credit. Go to annualcreditreport.com. It's free to check your credit bureau and what your credit score is and have a credit report. You want to do this for numerous reasons. The top reasons are it's going to show you what accounts you have listed and how they're titled. So that's important to know because you might have some accounts that all of a sudden you had no clue were on your credit report that have been opened by someone else, either by mistake or on purpose. So I've seen this with husbands who maybe get a loan and you don't even know that your name's on it. You need to know about this in divorce. So your credit checks, very important. Also, when you see mistakes, you can report it and say, hey, this is a mistake. I didn't miss a payment or whatever it may be. Another reason that you need to know your credit score is remember that house. If you want to get a new house or if you want to do anything really in your new life, you are going to need a credit. You're going to have a new life on your own without his. So if you haven't worked and you haven't shown a different set of your own credit card, let's say, there's a lot of stuff that you're now going to have to do yourself. And I don't want to be the bearer of bad news, but you have to have a credit score. So knowing what it is now, you can take measures and precautions to fix it if needed. So you just want to be aware of your credit score. Annualcreditreport.com. Don't pay for it. It's free. Okay. So it's good to be prepared no matter where you're at in the divorce process. That's just a thing right now I want to say. And also it's important that if you're thinking of divorce today, if you don't have an account in your own name, So if you have just joint everything and he's the one who does the finances, that's normal. Just to have something in your own name and make sure that if you open an account online, because remember, once you're divorced, you're not going to have his credit helping you. Let's say if he's the one who's always opened accounts, post-divorce, if they, your team around you in divorce tells you go open a bank account. Well, if you don't have the credit to open a bank account, how are you going to do that? So do it now, pre-divorce, if you can. Just make sure that all email notifications and all mail and if you have it going to your house is discreet. Okay. If you can. The next thing is your family and friends are beautifully designed to help you through divorce, but sometimes they're going to give you bad advice. You need to go to the experts on this. If you have questions about your specific situation, because every divorce is different. So have them as a support system, but also ask the right questions. Like if you have a question about basis or tax, don't ask your best friend what they did in their divorce, because they're not going to give you an answer that's relating to you. They have their biases, and they might be really wanting you to have the best experience, but their advice might not be the best. Okay. Another thing is that relates right into having a team in place. So even if you're not ready to file, or even if you don't get divorced, you still need to get the right education. So talking to a lawyer, having a consultation, or talking to someone in the divorce world, divorce realtor, therapist, divorce coach, whoever it may be, you just need to have these conversations to start with. And again, friends are great, family is great, but it's really good to talk to professionals. That doesn't mean you're filing. So again, doesn't mean that you're going to go file tomorrow just because you talk to them. You just need to be on the same page and educated in ways that you weren't before. Okay. And why I say that as well is because what I see a lot of times is people are so ashamed of not knowing about the money situation. And I've written a lot of articles about how I'm never ashamed to call the electrician. This just happened, where I had to call the electrician and ask him to come fix my water heater and what's wrong. And I was not ashamed at all to ask. I didn't know what was going on. I don't really understand it, and come fix it and help me understand it and educate me. Why is it with money that it's a taboo, it's our culture. And just know you're not alone. You're not the only one going through this, and it's okay to ask questions. You need to have a right team around you and ask these questions too. Okay. Because I'm not a brain surgeon. I'm not ashamed to talk about how I don't know that. Just like the electrician, just like money for you. If you don't know about it, don't be ashamed. It's hard to say that because I know our culture, is, but you shouldn't be. You're not alone either. Everyone on this call is feel the same way. Last thing is change your passwords. You don't want your children or someone else to see that you're talking to professionals, and they might know your passwords to your emails right now. So if you can change it, go right ahead and do that. Any stage in the divorce process. Okay. Last few things here. Creditors. So let's say you have a credit card and you have $20,000 debt. Creditors do not care if you are divorced, married, anything. They don't care at all. So they will come after you, even if you are divorced. And even if you're telling this creditor, this isn't my debt anymore. This is my ex's. They don't care at all. I would use stronger words here, but I'll be polite and just say they don't care. Okay. So you need to protect yourself during the divorce process, understand that, and talk to lawyers about how to protect yourself. Okay. Next one is spousal benefits and health. If you are the stay-at-home mom, or if you're working and you're on your spouse's health insurance, you need to understand what those benefits are if you guys get separated. I know this is a lot to take in, but if you're able to call his benefit provider, his health insurance, and ask, if we get separated, what happens with my health insurance? Also with that, if you can, to set the right budget, call some private providers of health insurance and ask, if I am healthy and I'm 40, 45, 50, 55, however old you are, can I get a plan and how much does it cost monthly? Just a rough estimate. Because if you're about to get divorced and you don't know this information, you need to factor it into the divorce numbers so that you're getting compensated to pay $800 a month for your own health insurance. You also need to know if you're even able to stay on his and what other options there are. Okay. There are other options, just you need to know about them. Okay. Last part here is your homework. Let's just say 6 months to a year after you get divorced. I see a lot of women not updating their will or having an estate plan. So what I mean by that is a lot of women still have their exes on all their bank accounts, on all their will and estate planning. And if you were to die after your divorce, do you really want everything you just went through to go right back to him? And I'm not saying it will, but I'm saying you just need to be prepared and try your best to be proactive here and set new people onto your accounts that you want the money to go to if you were to pass. So most of the time it's going to be your children, your family, your friends, not your ex. Okay. So talk to an estate planner. This is again, after you're divorced, maybe set this as a homework goal. But that's really important to do. And I see a lot of women making the mistake of not doing it. So that's why I bring it up. Okay. This is something I want to talk about briefly. Cash is king in divorce. So again, retirement accounts, they're great and they're not the worst. Obviously, you want to get whatever you can in the divorce, but if you can get just physical cash in a savings account or a brokerage account that is in cash, take that if you can, if it's the same amount as a retirement plan. Also, why I bring up cash is king is because if you are thinking, like most women are thinking, they think that they're going to get alimony, spousal support, maintenance, that all means the same thing, which means your spouse is going to pay you after the divorce. If you're thinking, like most are thinking, that that's going to last a really long time and it's going to be a high amount to live off of, you might be sorely wrong and disappointed, because nowadays the courts are being a lot less lenient and they're saying you need to go out and get a job if you've never had one, which is devastating to hear. And there's a lot wrong with it, but we're not going to go there today. We're just going to say you need to be prepared that if you also trust your spouse, let's say you do, and you're getting a divorce and you still trust him, great. But that money that maybe he is supposed to pay you for a certain amount of years and a certain amount of dollars, and yes, it might not be what you thought it would be, but let's just say he's still going to do it. Well, what if he doesn't? Do you really want to go back to court, or do you want to get involved with lawyers and say, hey, he still owes me money monthly? Or do you want during the divorce to maybe think about having some more cash instead of him paying you post-divorce? Just throwing out options for you, okay? And I'm also making sure you're prepared that the alimony, spousal support, maintenance is not as high as it used to be and as long. And I'm not a lawyer telling you that this is final, but it is a fact that it's becoming less of a thing over time now in our age. Okay, so just make sure that you also know that you might not want to be tied to him the rest of your life. So having more cash and not being paid alimony gives you more control. So that's kind of a good thing if you think of it that way. Another thing is that you might be wondering is, okay, Olivia, I already have anxiety over money. I already don't know where anything is. I don't know about the money and I never have. And now you're saying, oh, you should maybe get a lump sum or like a big portion of the money up front instead of him paying me. I should, pay myself potentially monthly out of a lump sum. I'm not sure how to do that. That's okay. That's where you get a team involved to help you through the process. Okay. You don't have to do it alone. So that's just the last thing here is don't apologize for asking questions, because all these things are really understandable not to know if you've never dealt with the money before. So this is just an option for you to think about cash instead of certain other aspects of the money in divorce. Okay, last few slides here is Social Security. A lot of people think Social Security is going to completely help them through their whole retirement, and that's a myth. Social Security is a really good, helpful baseline, but that's not enough usually for retirement expenses in this day and age. So you need to know about your options, about retirement, about Social Security, and know that you might need to have other options out there, like getting a job or getting more retirement assets out of the relationship and the divorce, than relying on Social Security, thinking it's going to help you through until you are at the end of your plan. Until you pass away, Social Security might not be the best and only resource for you. Another thing is financial advisors don't know the law and lawyers don't know the finances. That's really what I want to hone in today is lawyers are doing their job, financial planners and everyone else is doing their job. You have maybe a divorce coach and a realtor and a therapist and a business evaluator helping with the businesses, maybe in your relationship. All those roles are different. And a lot of times we see women coming and saying and asking questions to one of the parties, they might have to refer you to another. Okay. So not everyone in divorce knows everything, and there's team members specifically designed for different parts. I know, I wish we all could just know everything and we don't. Okay. Last little part here is alimony. Going back to that alimony does not last if he dies. So I know that's really not the most fun topic, or maybe it is, because maybe you're like, oh my gosh, I wish he would die. Okay, joking aside, you really want to make sure you're protected. So if in your divorce decree, in your settlement, it says that he's going to pay you alimony and you have small children at home, and this is your support you need every single month from him to survive, you might want to talk to your lawyer about having life insurance benefit you. And I am not a big believer in having life insurance and sales just in insurance world. There's a lot that can go not in the right direction unless you have a trusted professional and you know what you're talking about. But in divorce, life insurance can be a plus because it protects you if he were to pass away. And make sure that you still get that income monthly. So talk to your law team and they'll bring in an insurance guru they trust, and you guys can have that conversation about how to make sure those payments don't stop if he passes away. Another thing is when you do that, you want to make sure that your ex, soon to be ex, is not the owner and payer. He's not paying the premiums of that life insurance, because what happens when he decides, I don't want to pay that life insurance for her anymore, I'm just going to let it lapse. So make sure your lawyer and law team have you paying the premiums so that he can't have it lapse and you still get paid if he were to die. Okay. So last point here is resources. So there's some resources I list right here, and I have my little logo icon because it'll take you to my website that shows the resources of books and the links. There's some really good things to, listen to on podcasts, read about. The best resource, again, we're going to talk about today, and I know Judy brought it up, is Savvy Ladies Hotline. Just use them as a resource and watch these webinars. There's so many things financially related that you can get help for without paying $1. So utilize them and congratulate yourself right now because you made it. If you're recorded and you're watching this at home right now, I'm just really, really thankful you guys came today and you listened to the whole thing. And I hope you took one thing away from today. So thank you for joining.
Olivia, thank you so much. It's so informative. I want to share a few questions with you that have popped up during your presentation. Some are around the house, no surprise here. So around the house, what happens when there's debt or second mortgages? How does debt play in? And you may not have known as the female that there was all this debt carried on the house.
So whenever there's debt, you're either going to be splitting it. So there's a lot of creative ways in divorce to split assets and split liabilities. Liabilities is debt. So you're going to talk to your lawyer, and your team's going to most likely get the right people involved to make sure that if there was debt that you didn't even know about, and it wasn't you, or if it is the house and there is, second or third mortgage, whatever the case may be, so line of credits are on your house, you're going to divvy it out and come up with a creative solution. Not every single one's the same, but there's options. I wouldn't worry too much about it because you'll be able to discover it as well. So there might be a hidden line of credit on the house. You guys will find out everything. There's a paper trail with, so don't worry too much about that.
Kate here is asking, you mentioned many times having a team, and what if you can't afford a team? What are the best ways to get informed?
Mm-hmm. So Savvy Ladies Helpline, ask a financial planner on that helpline. What do I do? And next one is on resources page. I have a lot of different organizations that help with women in divorce, and they're just really good resources. So on the screen right now, I know you see some of them. I think I put Divorcify, Chapter 2 Club. IACP is International Association for Divorce Professionals. And there's a lot of people out there in the divorce world. If you can't afford a team, they'll help at least give you resources that are free. So just looking online is a really good start to find those resources. Because yes, I totally get it. You can't have 10 people all lined up paying each one, but at least do your due diligence to look around and research what's out there. These websites are a really good start, and reading is a really good way of looking, and podcast listening too. A lot of them are so informative.
A bunch of questions are coming. And I want to say probably a financial consultant or part of your team is probably your number one team player. And to find that financial person is going to be a very smart move on your part, be it from Savvy Ladies Helpline or moving to a fee-based consultant to work with you if you have those funds. But it's really critical to know where the money is. And I think some of the questions are also around that forensic, finding where the money is. Can you speak a little bit about finding the money if you don't know where it is?
Yes. So if you can't, let's just go with let's say you can't afford to have a forensic accountant come in and find all the hidden assets, because sometimes that bill is worth more than what that forensic accountant even finds. So let's assume that you need to do it your own, or you're going to try to start there. Tax returns. There is a million pieces on the tax return that you're going to be able to find hidden assets on. If he's trying to hide something, it's most likely going to show up there. And I don't want to go into schedules and all of the fun tax stuff, but just go online first off, or if you have an accountant, talk to them about, hey, can you talk to me about a tax return and where to find certain things? But a tax return is going to give you all the gems, and it's going to at least show you look at the last 3 years, and just see, what is coming in, what's going out, what other interests there are. So if you're making money, where are you making money from? They have to list all those accounts on there. And online, you can go say, hey, how do I understand a tax return, and where do I find hidden assets, and where, you can get a little of the research done yourself online. Another thing is, a lot of women don't even know where their IRS tax return is, right? Their husband e-filed for them. Well, you can go to the IRS website, and actually there's a way to just type in IRS tax return need, and you'll be able to have a link where you can find your tax return. If you answer some of the security questions, they'll send it to you electronically or by the mail. They've gotten a lot faster. So you can actually then review your tax return and get a CPA involved. And there's a lot of resources that you can do without getting a forensic accountant to find those hidden assets. Another thing really quickly is collectibles. That's an asset. So if you have artwork and you never knew that it was, appraised for a certain amount.
Jewelry, right? Jewelry, artwork, furniture.
I was gonna say, yep. And then even his, stash of really his, items. You guys want to know that, because those are not just stuff around the house you don't want to appraise or know about. So I also recommend taking photos of everything in your house, because some of that stuff might go missing if you don't have documentation to tell your lawyer. We can go down a rabbit hole, so I'm going to stop there.
Right. I was going to say, there's the wine in the wine cellar. Absolutely. That's a very hot commodity, and musical instruments and so forth.
Yes.
We're going to wrap up with one or two last questions here. One question here is, I want to put a lot of money down to buy a new home and use the cash. Should I be using the money from the retirement funds that I'm getting from him? And Olivia, please, if you can speak to, I know there are situations where there is a window of time that is available where you are not penalized if you take money from the 401 and use it as cash.
So that quadro has no, and this is a little loophole, there's no real time limit after divorce of when you can use that. I say do it immediately, because you don't want that money just sitting around invested in his retirement account aggressively going up and down. You want to just get the money in your hands. So you want to split the assets with a quadro, but that quadro allows you not to have that penalty. And when you're doing that quadro, you can actually avoid that penalty by putting it into an account to buy that house with. The first part of that question though, so let's stop the quadro conversation for a second and go back to just, hey, I want to buy a house with a lot of the large sum of money. You can, and you can do it without a penalty if you do it correctly with that quadro, but you want to make sure that if you're about to put a huge amount into a house, that you're still protected and you can last with your expenses each year for at least 5, 10, 20, 30 years. So I don't know how old you are, but you need to make sure your money is going to last and it's not all in the house. So sometimes what I say is don't make irrational decisions. I'm in behavioral finance as well. So I look into the neuroeconomics and the emotions of money and investing. Don't make an irrational decision right after a divorce, like put all your money into a house because you know it's going to work out. Because what are you going to live off of? So unless you have high level of assets sitting in a savings or 3 to 6 months at the very least of living expenses, and you have a high paying job and you have a cushion behind that and you have investments, I wouldn't throw all of my lump sum into a house unless you know that all your expenses are paid for and covered and you have emergency funds sitting around everywhere. Okay. So just be careful of doing something too quickly. You might want to wait a little bit, know where your finances are, where you're at, and if you can afford it. Okay.
No, that's a great response, because sometimes if you take that money out, you also have to recognize it as income.
Ordinary income. So that's another thing is I'm asked a lot about that. And we'll go very briefly and say that if you have money and you can spread it out to have income hit each year over, let's say, a 3 to 5 year period, that's better typically than all one year where you're going to potentially get shot up into another tax bracket because you show all this income one year. Instead of, if you spread it out 3 to 5 years of little spurts of income coming in that's taxed, you're at a lower tax bracket, so you're not paying as much income tax. That goes way too deep. Let's keep it simple and just say, watch out for taking big money coming into your bank account and getting taxed on it, because the IRS wants their money. Okay. Careful.
They always want that money, don't they? Going to wrap it up with one last question here, and it's interesting. It is coming around cryptocurrency.
Okay.
When my spouse is now using some of the money in cryptocurrency, what's my recall?
Okay. We could do a whole presentation on Bitcoin, cryptocurrency. For everyone listening that has no clue what that is, no one else does. So I don't care what you hear on TV of experts, no one knows anything about it. It's very complicated for no reason. So don't get into it. It's a gamble. If your husband does it right now, you think that it's all just ghost, you don't know where it is. There's a paper trail somewhere because it's in electronics. So you will be able to, with your law team, let's just say you only have one person helping you, and that's just your mediator or lawyer. They will have a discovery asking for those assets, and he has to legally tell where they are and how much. So technically that cryptocurrency, he should be saying how much is in it. Was that answering the question? I hope I did a little bit of job there.
Yeah, no, I think you did.
Okay. Yeah. That's an asset. So that's part of your relationship. If you guys bought it together, community property and married, yeah, you need to know where that is and what it is.
I think the last question is if you can just give a quick explanation or definition of community property and what's yours, his, and ours, I guess. And that would be the last question of our webinar today.
Okay. So community property versus separate. The very, very, very basic definition. Community property is what you both made and earned together in the relationship. And then separate property is unique to you before the relationship or during, if you got a gift or an inheritance. So if he gave you a diamond ring and you guys got married, that's a gift. That's not part of the marital community property state. That's separate. If you have a family member who passed away and that's an inheritance and you left it in a separate account, that is traceable to just you. That's separate. Community, though, is what you both earn together. So let me stop with this and say, if he worked for a company for 30 years and you were the stay-at-home mom, you absolutely are community. You helped with making that, raising the children. You helped with everything in that relationship. So everything in his retirement account or his investment account is community. If he started that company when you guys were married, that's yours. That's yours as well. It's community. That's not his. Okay. Hopefully that helps, because that's a very strong feeling for me, is you did your job too.
Well, thank you so much.
Yes.
I want to direct everyone who has really specific questions, and I know there's some more questions coming in around maybe your own rental property or your own sort of split of discovery of assets. Please use the helpline submission form. Olivia is a helpline volunteer, and we have over 100 volunteers on the helpline where we match every day women to get their questions answered. And these are really important questions. We want to do our give you that service to really answer those questions and be mindful of your time and getting the right answers that will help you specifically. So thank you everyone for joining us today for the Savvy Ladies Wisdom webinars. This truly was great tips and words of wisdom. Olivia, thank you so much.